Cash 101 Loans. Everything we covered this week was preparation. Credit cards, interest, good habits, bad habits, all of it leads here. In the next 60 seconds, you'll understand how lenders actually price loans and how one mistake can cost you tens of thousands of dollars. By the end of this video, you'll know why two people with the same income can pay wildly different amounts for the same loan. Because once loans enter the picture, personal loans, auto loans, mortgages, your credit score stops being just a number. It becomes a price tag. How lenders actually think. Here's what most people don't realize. When a bank looks at you, they're not asking, can you pay? They're asking, how risky are you? Your credit score, your payment history, your balances, all of it answers one question. How likely are you to mess this up? The higher the risk, the higher the interest. And interest is how lenders get paid for trusting you. Why APR matters more than the loan amount. This is where people get trapped. They focus on the monthly payment instead of the total cost. A lower payment stretched over more time with higher interest can cost you more than a higher payment with a better rate. That's why two people can borrow the same amount, and one pays thousands more for the same loan. The three loan categories, not all loans are treated equally. Personal loans. These are the riskiest to lenders. No collateral. That's why interest is usually higher. Auto loans. The car backs the loan, so rates are better. But miss payments and they can take it. Mortgages. The lowest rates, the longest terms, and the highest stakes. One mistake follows you for decades. How credit behavior multiplies here. Everything you did with credit cards gets magnified with loans. Good habits lower your rate, bad habits compound the cost. A few points on your score doesn't feel like much, till it changes your interest rate and adds years of payments. The biggest mistake people make with loans, they rush. They apply before they're ready. They accept the first offer. They don't shop rates. And once you sign, the math is locked in. Here's the part most people never hear. You don't need perfect credit to win with loans. You need prepared credit. Timing matters, balances matter. Recent behavior matters more than old mistakes. And this is why personal loans, auto loans, and mortgages should never be treated the same. Tomorrow we break them down one by one, starting with the easiest to misuse. This is Cash 101. Follow for credit truth, not credit myths.